Welcome to Griffonomics.
It's good to be back.
It is February 17th, 2026. And the markets are doing that thing they always do.
Chasing the shiny object.
Always. Chasing the parabolic line on the chart. But we aren't here for that. We're here to dig into the machinery underneath all the hype.
That's right. And usually when we say digging, we mean, digging into balance sheets, into 10Ks.
Which we will do.
Oh, we will. But today, it's a bit more literal, or at least the metaphor is.
You know that old saying about the gold rush, right? It's the ultimate investment cliche, but it's a cliche for a reason.
It works.
It works. When everyone's running to California with madness in their eyes to dig for gold, the smart money doesn't just grab a shovel and join the crowd.
No, that is how you go broke. That's how you end up with a whole lot of dirt and absolutely no retirement fund. The smart money becomes the guy selling the shovels.
Yes, you sell the pickaxes, you sell the denim jeans, you provide the infrastructure that all those dreamers actually need to do their work.
You're the toll booth on the road to the gold mine.
Exactly. And today, we are applying that picks and shovels logic to what is, arguably the most chaotic, explosive, and frankly overwhelming sector in the global economy right now.
The drone industry.
The drone industry.
Or, as the Pentagon is now calling it, the attritable autonomous systems sector.
Right. Let's stick with drone wars. It's a bit punchier.
Fair enough. And it really is a war in every sense. The last 2 years have just changed everything.
We've seen warfare shift completely in Eastern Europe, in the Pacific. We've seen commercial logistics just pivot on a dime to drones as a service. Everybody's looking for the next Lockheed Martin of small drones.
Everyone wants to find that one company, the one that builds the drone that wins the big contract.
But picking that winner is, it's incredibly difficult.
It's a nightmare for an investor, actually.
Yeah.
You have dozens of manufacturers all fighting for the same contracts, all dealing with the same, regulatory headaches.
You could bet on company A because they have a cool prototype, and then they lose the contract to company B next week because of some tiny supply chain hiccup.
And your investment gets cut in half.
Exactly. Which brings us to the subject of today's deep dive. We are looking at a company that is effectively saying, look, we don't care who wins the contract.
We just want to sell them the parts.
We are looking at Unusual Machines, ticker symbol UMAC.
A company with a name that, sounds like a hipster coffee shop or maybe an indie rock band.
It really does.
But its business model is rapidly becoming a critical piece of U.S. defense infrastructure.
It is such a fascinating story. You have a company that, started out selling hobbyist parts toys essentially for drone racing nerds.
Yeah.
And now they are sitting on a war chest of over $130 million in cash.
With zero debt.
Zero debt. And they're embedded with the U.S. Army's 101st Airborne. It's a wild transformation.
It's the ultimate pivot. And it didn't happen by accident. It happened because the entire geopolitical landscape shifted under our feet. And UMAC was just sort of perfectly positioned to catch the falling debris.
There is a lot to unpack here. We're going to look at their picks and shovels strategy. We're going to look at the regulatory moat that Donald Trump Jr. and the FCC have helped dig around them.
And the financial reality behind those recent profitability headlines.
Yeah.
Because that's a story in itself.
It is. And we need to answer the big question. Is this a legitimate defense compounder that's going to power the next decade of aerial robotics?
Or is it a diluted, speculative bubble that's just going to pop once the hype dies down?
So let's start with the business model, because when I first looked at their 10K filings, I was confused. I saw goggles, I saw these little electric motors, video game controllers.
You thought, is this a toy company?
I did. I thought, what am I looking at here?
It is an easy mistake to make.
Ugh.
But the best way to think of them is like the ETF of the drone industry.
Yeah, let's unpack that analogy. An ETF, an exchange-traded fund, is, a basket of stocks I buy to hedge my risk. I buy a semiconductor ETF. I get a little piece of NVIDIA, a little Intel, a little AMD.
Exactly. You don't have to pick the one winner. You're just betting on the entire sector's growth. UMAC is trying to do the same thing, but with hardware.
So they aren't trying to win every single massive government contract to build the full aircraft. What's the term?
To all up around.
Right. They aren't trying to be the next Boeing.
Correct. They want to supply the parts for whoever becomes the next Boeing, or the next AeroVironment, or the next Sky deal.
So it doesn't matter if Company A or Company B wins the contract to supply the Army with 10,000 surveillance drones.
As long as UMA is the one selling the motors, the flight controllers, and the video transmitters.
They're the Tier 1 supplier.
Precisely. In the auto world, Ford is the OEM, the original equipment manufacturer.
Yeah.
They put the blue oval badge on the truck. But companies like Bosch or Magna, the ones who make the brakes and the fuel injectors, those are the Tier 1 suppliers. UMAC is positioning itself to be the Bosch of the American drone industry.
And they've broken this down into a few specific segments. Let's walk through the guts of the operation. I mean that literally. The component manufacturing segment.
This is the growth engine. This is where the whole story has shifted from toy store to defense contractor. Their focus is now B2B business to business and B2G business to government.
Okay, and what specifically are they making? Let's get granular here.
3 critical things. First, you have the motors, specifically their 2807 motor.
Now, to a listener, 2807 probably just sounds like a random number, but in the FPV, the first-person view world, that number, it means something specific about the physics, right?
It does. It refers to the stator size, so the width and height of the magnets inside the motor. And a 2807 is a workhorse. It's not a tiny little micromotor for a buzzer drone. This is a heavy lift motor for, say, 7-inch and 10-inch drones.
And those are the sizes that are used for carrying payloads.
Exactly. Payloads. That means cameras, sensors, or, kinetic payloads.
Explosives.
Explosives. This is the engine of choice for the drones that are actually doing real work in the field. And crucially, UMC is now manufacturing these in Orlando, Florida.
And the made in USA part is the key phrase there.
It is everything. We'll get to why that matters so much in a minute, but yes.
Yeah.
So that's one. Second, they make the flight controllers.
The brain.
The brain of the drone, yeah. They have a line called the Rotor Riot Brave F7. This is the little chip that translates the pilot's stick movements into instructions for those motors.
So if I push the joystick forward, the flight controller does all the math to spin the rear motors faster and the front motors slower, so the drone tilts and moves forward.
Exactly. And it does that calculation thousands of times per second. Now, just imagine for a second if that chip has a compromised line of code.
A backdoor?
Imagine if it has a backdoor that connects to a server in Shenzhen or Beijing.
Your drone is now a spy.
Or it's a liability. It could just fall out of the sky on command. That is why the brain absolutely has to be trusted.
Okay, so motors, brains, and what's the third piece?
The third piece is the ESCs, the electronic speed controllers. Theirs is the Brave 55A. If the flight controller is the brain, this is the muscle.
Ah.
It takes the command from the brain and pumps the actual high-voltage electricity into the motors to make them spin at the exact right speed.
And all 3 of these, the brain, the muscle, the motors, they all have to be what's called NDAA compliant.
The National Defense Authorization Act. That is the magic acronym right now. Section 848 specifically.
Which basically means?
It basically means no Chinese supply chain, period. If you want to sell to the Department of Defense, or increasingly if you want to sell to anyone in the U.S. commercial sector, you cannot have Chinese silicon in your flight controller. And UMAC is one of the very few companies that can stamp NDAA compliant on these critical parts.
Okay, so that's the B2B, the government side. But they do still have that toy store aspect we mentioned, Rotor Riot.
They do, and it's actually really important not to dismiss it. Rotor Riot is their direct-to-consumer e-commerce store. It serves the FPV community, the racers, the hobbyists, kids flying drones through abandoned buildings for YouTube videos.
It feels like a distraction, though, doesn't it? If the real money is in defense, why keep the hobby shop? Why not just spin it off and focus entirely on those big government contracts?
Because it's a sales funnel, and it's a testing ground. Think about it. Who are the best drone pilots in the world right now?
Not some 50-year-old Air Force general.
Exactly. They are 19-year-old gamers who grew up flying FPV in their backyards for fun.
That's a great point. The recruitment pipeline for the military's drone program, it starts with the hobbyists.
It absolutely does. So Rotor Riot keeps UMAC plugged into that culture. It gives them a kind of cultural relevance. But, maybe more importantly, it provides high-volume testing.
Stress testing.
Extreme stress testing. If a motor can survive a professional drone race where it's being pushed to the absolute limit, crashing into concrete at 90 miles an hour, overheating, getting wet.
It can probably survive a battlefield.
It probably can. It gives them a feedback loop that these pure-play defense companies just don't have. Lockheed Martin doesn't have 10,000 teenagers crash testing their components every single weekend.
But UMAC does.
UMAC does.
That makes a lot of sense. It's basically R&D that's paid for by the customer.
Exactly.
And then there's Fat Shark, which I have to say is the best name for a tech company I've heard in a very long time.
Fat Shark is legendary in this space. They make the goggles. When you see a drone pilot wearing those, futuristic headsets, looking like they're in Ready Player One,
That's usually Fat Shark.
it's almost always Fat Shark.
And these provide that low latency video feed so the pilot can see what the drone sees in real time.
Ultra-low latency is the key. Milliseconds matter when you're flying fast. If your video lags by even half a second, you've already hit the tree before you even see it on your screen.
Right.
But here's the big update for February 2026. Fat Shark production has moved. It used to be foreign production. Now, they're assembling these headsets in that same Orlando facility.
Bringing it all home?
Literally. They've established this 62,500 square foot facility in Orlando to house all of this. It is not a small garage operation anymore. This is a real factory.
So that's the machine, pun intended. You got the parts, the store, and the goggles. But the reason we're talking about them specifically today, in February 2026, is because of what happened at the end of last year.
The pivot.
The pivot.
Yeah.
The CEO, Allan Evans, who seems like quite a character, by the way, he referred to it as a Christmas gift.
A Grinch-style Christmas gift.
Yes. He said the Department of War and the FCC gave them a present that basically ruined their holiday plans, but, made their business career.
It's a great way to put it.
So let's talk about what happened in late 2025.
It was a regulatory 1-2 punch that just completely reshaped the entire market. First, you had the FCC. The Federal Communications Commission dropped a ruling that effectively banned foreign-made drone parts from receiving authorization.
And this wasn't just for the military, right? This is the FCC.
Yeah.
This affects everyone.
Everyone. We're talking commercial delivery drones, dropping off burritos, inspection drones, checking for cracks in bridges, real estate photography drones.
Everything.
Everything. If your drone used a video transmitter or a flight controller that was on the covered list, which basically is code for made in China,
Right.
or specifically by DJI and its affiliates, you could not legally operate it in the U.S. anymore.
That is a massive shock to the system. I mean, the market was just flooded with DJI parts, T-Motor parts.
It is a panic. Overnight, every single commercial drone operator in America woke up and realized their entire fleet was potentially illegal. They needed non-Chinese parts, and they needed them immediately.
And there just weren't many places to get them.
Very few. And then came the second punch, the gauntlet.
The Department of War, and I know it takes some getting used to the new naming conventions,
It does.
but the Department of War issued this urgent call, the Gauntlet program. They said they needed 30,000 domestic drones.
And not in 5 years. By summer 2026.
30,000. That is a huge number for a domestic industry that was, let's be honest, a cottage industry a few years ago.
It forced a massive, massive scaling event. Evans called it that Grinch gift because it meant they couldn't take time off for Christmas. They had to immediately go out and hire 30 new people, ramp up the Orlando production line, and just start churning out motors because the government basically said, if you can build it, we will buy it.
And we are seeing the results of that scramble in the numbers. We looked at that Q3 2025 milestone.
This was the inflection point. For the first time in the company's entire history, enterprise sales, so that B2B and government slice of the pie, exceeded 50% of their total revenue.
So they are no longer primarily a toy store.
No. The toy store is now the side hustle. The defense contractor is the main gig. And that one metric, it proves the pivot is real. They aren't just talking about getting defense contracts. They are fulfilling them.
But, and there's always a but, with these microcap companies, we need to talk about the money. Because I saw a headline that said they were profitable in Q3 2025.
Right.
Net income of $1.6 million. And I thought, wow, they did it. They're actually making money.
And that, my friend, is why you have to read the footnote.
Okay, burst my bubble. What happened?
Look, reporting net income is great. But you always have to ask where it came from. Did they make a $1.6 million profit from selling motors and flight controllers?
I'm guessing no.
No, they did not.
So where did it come from?
Investment gains. Specifically, $5.8 million in unrealized investment gains.
Unrealized. So, paper money.
Essentially, yeah. It's like if you own a house and Zillow tells you your house went up in value by $100,000. On paper, you're richer, but you can't use that money to buy groceries unless you actually sell the house. So UMAC holds stakes in other companies. They have a little portfolio. They own shares in SafePro, LightPath Technologies, and Kopin.
Kopin makes the tiny display screens, right, for the goggles.
Correct. Which aligns perfectly with their Fat Shark business. And LightPath make thermal imaging optics. So these are strategic investments. They make sense. But what happened is that those stocks went up in value during the quarter. So on paper, UMAG made $5.8 million.
But that doesn't help pay the electric bill in Orlando or meet the payroll for all those new factory workers.
Precisely. If you strip out those investment gains and you look at the actual operations, making and selling stuff, they lost money.
How much?
The adjusted operating loss was around $0.9 million. On a GAAP basis, it was closer to a $4.9 million loss.
So they are burning cash.
They are. They're a growth company in an extremely aggressive scaling phase. They're spending money to expand that factory, hire those workers, and buy raw materials. They are not operationally profitable yet.
However, and this is the big twist, they can afford to burn cash for a very long time.
They can.
We need to talk about this fortress balance sheet. This part just blew my mind.
It is highly unusual, pun intended, for a company of this size.
So they ended Q3 with about, $64 million in cash?
Right.
But then right after the quarter ended, they did an at-the-market offering. An ATM.
They sold stock directly into the market whenever the price was favorable.
And raised another huge chunk of change. So now, based on the latest filings and updates, they're sitting on over $130 million.
130 in cash.
With zero debt.
Zero.
Let's just put that in context for the listener. This is a company that had, $6 million in revenue for the first 9 months of 2025?
That's correct.
So they have more than 20 times their annual revenue sitting in the bank in cash. Why? Why on earth do they need that much money? Is it just to feel safe?
No, this is strategic. This is what we call the cash as a weapon strategy. In the defense industry, liquidity is a strategic moat.
How so? Explain the mechanics of that.
Okay, think about how the government buys things. It's not smooth, it's stop and start. Oh yeah. The budget gets delayed, the continuing resolution expires, the government shuts down for 3 weeks because Congress can't agree on a bill. And what happens? Procurement freezes.
And if you're a small supplier, living paycheck to paycheck,
You die. You go bankrupt. You can't pay your staff. You can't buy the copper wire for your motors. But
no.
UMA, with $130 million, they can weather a 6-month government shutdown and not even blink.
They can keep the factory running.
They can do more than that. They can build inventory. This is the killer app of having all that cash. While their competitors are laying people off because a contract is delayed, UMA can use that money to build a mountain of motors and flight controllers.
So when the government finally turns the money spigot back on...
UMA is the only one who can say, we have 10,000 units in stock ready to ship today.
In logistics, availability is the best ability. That cash pile allows them to be the reliable vendor when everyone else is scrambling.
That is a fascinating strategy. It's basically using cash to buy reliability. It creates a moat of inventory, and it scares off the competition. If you're a startup trying to compete with UMAC and you see they have $130 million in the bank, you can't bleed them out. They can outspend you on marketing, on R&D, on inventory holding costs, pretty much indefinitely. It freezes the field.
You mentioned the regulatory moat earlier, the FCC and the NDAA, but there is a political element to this moat as well, and we have to address the elephant in the room.
Or the Don Jr. in the room.
Donald Trump Jr. is the second largest individual shareholder of Unusual Machines. He's also a strategic advisor.
That is a matter of public record. And whether you lean left or right politically, as an investor, you have to look at this dispassionately. Politics is just a variable in the equation.
So what does that connection mean for the company, practically speaking?
It aligns them directly with the America First defense priority. The current administration has made it crystal clear. They want domestic supply chains. They want to decouple from China. Having the president's son as a major shareholder and advisor, it signals to the market, and maybe more importantly to procurement officers, that this company is safe.
It's like a seal of approval.
It opens doors, it gets you meetings, and frankly, it probably protects them. If there's a question about which supplier to choose for a sensitive program, the one with the direct line to the administration has a perceived layer of insulation. It de-risks the selection process for the government buyer.
And then there's DOGE, the Department of Government Efficiency.
Right, the new efficiency unit. Their whole mandate is to cut costs and speed up procurement.
And how does that help UMAC? I would think government cutting costs means less money for contractors.
It means less money for bloated contractors. DOGE hates the $10 million Predator drone that takes 5 years to build. They hate cost-plus contracts where the contractor literally gets paid more if they are slower and more expensive.
Right.
What they love are attritable systems.
A treatable. That's the buzzword we keep hearing. Break that down for us.
It means cheap enough to lose. If you shoot down a $2,000 drone, the U.S. Army doesn't care. They have 10 more in the truck. It's ammunition, not an asset.
But if you shoot down a $20 million jet...
That's a crisis. It's a congressional hearing. It's a whole thing.
And UMC supplies the $2,000 drone market.
Exactly. They're the value segment. Their motors cost $40, not $4,000. Their flight controllers are $60. They fit perfectly into this new DOGE philosophy of mass over class. Build swarms of cheap drones, not one single expensive one.
So the political winds are just blowing directly into their sails. The administration wants cheap domestic drones, and UNC builds the parts for exactly that.
It's a perfect alignment.
And here comes the other side of the coin.
Yeah.
We talked about that $130 million cash pile. It did not appear by magic.
No, it came at a cost. A very, very high cost for early investors.
Dilution.
Massive dilution. We can call it strategic staircase financing, which sounds nice, but really it's just selling a lot of stock.
I mean, look at these numbers. The share count went from roughly 3.2 million to 36.9 million in under 2 years.
That's more than a 10 times increase in the number of shares outstanding. So if you owned 1% of the company 2 years ago and you didn't buy more shares along the way,
You own a tiny fraction of 1% today.
your slice of the pie got much, much thinner.
This is the price of admission for this kind of growth story, isn't it?
It is. The management made a calculated decision. They decided that having the cash to survive and dominate the emerging supply chain was worth diluting the existing shareholders. They essentially sold a huge chunk of the company to the public in order to fund this war chest.
So for a new investor coming in today, looking at the stock in February 2026, does that past dilution matter as much?
In a way, it's actually better for the new investor. The dilution has already happened. The cash is in the bank. You're buying into the company that has the $130 million, not the company that needs to go raise it.
That's a good point.
But it's a warning. It tells you that this management team is not afraid to print shares to achieve their strategic goals.
Right. They prioritize the survival and growth of the entity over the short-term ownership percentage of the individual holders.
Which, if you believe in the long-term gold rush thesis, is probably the right move. If they had tried to protect the share count, they might have run out of cash last year and gone bankrupt. Now they're bulletproof.
Let's talk about execution. Because having money is one thing. Actually selling motors is another. Are people buying? Is this real?
They are. The backlog is the proof in the pudding.
And backlog means confirmed orders that just haven't shipped yet.
Right. Not hopes or wishes. They have over $16 million in confirmed purchase orders.
Can we break down who those are from? Because, orders can be a vague term. Sometimes companies puff those numbers up with soft commitments or letters of intent.
No, these look like hard orders from specific high-quality customers. First, there's a company called Strategic Logics. They placed a massive $12.8 million order.
12.8. That is huge for a company that had $6 million in revenue all of last year.
It's more than double their entire previous year's revenue in just one single order. That is scale.
Wow.
Then you have Performance Drone Works, or PDW. They have a $3.75 million order. And PDW is a major player in the Blue UAS program. That's the approved list of drones for the military.
And the one that really stood out to me was a direct order from the U.S. Army.
The 101st Airborne. The Screaming Eagles.
They ordered 3,500 motors directly from UMA.
For their ABE drone, the attritable battlefield enabler.
I love that name, Abe.
Honest Abe. But what's really significant here is that this validates the technology at the highest level. The 101st Airborne isn't buying these for a science fair.
Right.
They're training with them. They're deploying with them. When a soldier's in the field relying on a drone to see over the next hill, that drone is flying on UMA motors.
That is a powerful endorsement. It moves the whole story out of the theoretical and into the real world.
Exactly. It's not just we have a cool product.
Yeah.
It's the 101st Airborne trusts our product with their lives.
So they have the orders, but they need to churn them out. What's the target? When do they actually start making real operational money?
Management has set a very clear target. They are aiming for a $30 million annual revenue run rate by late 2026.
30 million.
That's the number they claim is the break-even point for operational cash flow positivity. Once they hit that scale, the profit from selling motors should cover the cost of the factory, the electricity, the staff, all of it. without needing investment gains or stock sales to plug the hole.
So that's the magic number, 30 million.
And that is the finish line for this phase of the company's life. If they hit $30 million in late 2026, the thesis is proven. If they stall out at $15 million, well, then they're just burning through that cash pile, just more slowly.
Okay, so bringing this all together, we have a company that has pivoted. It has the cash, it has the political cover, it has the orders, but the valuation is, well, the market cap is somewhere between $350 and $500 million, depending on the day.
Right, against $6 million in historical revenue.
That is a rich valuation. That is a spicy meatball.
It's extremely rich. You're talking about a company trading at like 50 to 90 times sales. It's wild.
So how do we verdict this? Is it a buy? Is it a sell?
We have it as a speculative buy hold.
Okay, define speculative in this context for us.
This is not a value stock. You cannot look at the PE ratio. It doesn't have one. You are essentially buying a venture capital ticket. You are betting that the U.S. government's ban on Chinese parts is permanent. You are betting that the gold rush for domestic drones is only just beginning.
And you're betting that UMAC's $130 million war chest allows them to crush the competition and become the de facto standard.
Right. The bull case is strong. You have the regulatory wins, the massive cash pile, the political connections.
The bull case is that they become the Intel of drones. You know, Intel inside, but for drones. UMAC inside. Every drone made in America has a UMS motor.
That's the dream for shareholders.
And the bear case.
The bear case is all execution risk. Can they actually manufacture 30,000 motors a month in Orlando without serious quality control issues? Can they hire the right people? And does the government actually pay its bills on time? Or does that valuation just compress because they can't grow into it fast enough?
And the dilution risk is still there.
The dilution risk always remains. If they burn through that $130 million in 2 years and they still haven't hit profitability, guess what? They're going to have to come back to the market and dilute you again.
It's a high-stakes game. But hey, that's why we call it a deep dive.
It is. And honestly, watching a company try to rebuild an entire critical supply chain from scratch in Florida, it's one of the most interesting industrial experiments happening in America right now.
It really is. It's the complete reverse of the last 30 years of globalization happening in real time.
Precisely. We spent 3 decades outsourcing everything to Shenzhen. Now, because of a few signatures on a piece of legislation, we're trying to bring it all back to Orlando in, like, 18 months.
And UMAC is the test case.
They're the canary in the coal mine. Or maybe the eagle in the coal mine in this case.
I like that. The eagle in the coal mine.
If they succeed, it proves that this kind of reindustrialization is possible. If they fail, it suggests we might be too dependent on foreign supply chains to ever truly break free.
That is a heavy thought to end on. But it's the reality of the situation.
I guess.
So as you're watching the drone sector, don't just look at the shiny aircraft flying in the promotional videos. Look at the motor spinning the prop. Look at the little chip inside the plastic case. Because that's where the real battle is being fought.
And that's where the smart money is watching.
Exactly. Well, that wraps up our deep dive into unusual machines, ticker UMA, a company trying to sell the picks and shovels for the new drone wars.
It is going to be a fascinating year to watch them.
We will definitely be keeping an eye on that $30 million revenue target. Thanks for listening to Griffonomics, Risk Defined.
Portfolio protected.